Guys,
Rick, you made it. Thank
holy
you.
cow. I'm technically challenged here. Holy moly. I'm sorry about that. I hope you've been talking a lot about Deephaven.
Yeah, we just did some high level stuff, where we're located, just some of the, high level value proposition.
Well, hey, listen, let's just zoom up to 30,000 feet about non-QM. And I'm really sorry I had trouble getting in and other issues, but and Tom, had you gone through sort of the state of the market and where things were at and what's going on in the non-QM space, particularly around self-employed borrowers and investors and different categories of non-QM?
Yeah, no, we just did high level on Deephaven. Just a quick pulse check or market update on the non-QM space, right? So, last year, I think the securitization market was about a 27 billion kind of market. This year we're expecting to hit, there was a piece yesterday that came out that, securitization market could hit 40-45 billion. So, that's just what the securitization market, number is. There's a lot of,
Tom, just to frame that a little bit, I mean,
Yeah.
that's a couple of 100,000, units that are going to take place, and it's almost 8%, of the overall, market. So it's a growing segment, serving lots of different, clients. What are some of the strategies that you're helping brokers to employ to go after such a sizable market that's really been, left alone or kind of dealt with by happenstance, right? Something happens into your office.
Yeah, so if you just, once again, the market's definitely grown, right? We expect it to grow year over year. A lot of these loans are not even securitized; they're portfolioed, whole loan portfolio. So they're that piece of the non-QM market that adds to the overall origination market. So, last year, as you know, Rick, the market was a 4 trillion kind of number overall originations. This year, it's about 2.4. 2.5. So there was all this overcapacity, and we're seeing some of that, with some of the, the news we're seeing in the marketplace. And, the refinance production has significantly dropped, year over year. I think Q1 of last year was about 70%. Q1 of this year was about 24%. And, if you're an originator out there and you're focused on refinance transactions and those leads aren't coming in, over the last 5-10 years, these borrowers or your contacts every year would come to you to refinance because the terms were better, right? The cash flow was much better. So that type of production, that repeat business is no longer there in a refinance. So we're seeing a lot of loan officers actually, and lenders looking to expand their product offering and serve more borrowers that they didn't serve in the past. And as there's agency borrowers in every town in the United States, right? But there's also non-agency borrowers in every town, whether it's a large metro area, whether it's a rural area, let's call it somewhere in Wyoming, whether it's a coastal area or, there's investors, there's self-employed borrowers, there's credit event borrowers, there's bars that just don't fit the agency guides, and all over the United States. Actually, I heard a quote the other day that, there's more self-employed borrowers in the United States than there's veterans. And as you know, the VA home loan program is a very, very important program to housing and, supporting the veterans. But there's more self-employed borrowers today than there's veterans. So if you're serving the veteran market, you should also be serving the self-employed market. And that's where non-QM kind of fits in. And, the majority of the non-QM loans in the space are self-employed borrowers.
Well, I recently read an article. I think it was written by you.
Yeah.
and it talked about, there being 16 million self-employed, borrowers in the United States. So if you take a 200,000 to 400,000 transaction, a year market, and then you can get laser focused on, the self-employed, that's huge. What about high net worth? What are some of the things that you're seeing with, high net worth customers? Because you've got, self-employed, you've got high net worth, and you've got investors that are really the sweet spot of of, non-QM?
Yeah.
What are your strategies to,
Yeah, I'll hit it on a high level, right? And then Luke could piggyback as well. But look, in every town there's high net worth and there's wealth advisors, right? So that's a perfect program for asset utilization, where you could utilize the assets to qualify for a loan. And a lot of these wealth advisors don't have mortgage arms, and if they don't want to send them to like a bank such as a Chase or Wells down the street, because if they do, then they'll take those investment accounts and they'll try to give them a really good rate and take the investment accounts, right? So it's what perfect opportunity is, and a lot of the offices that a lot of these brokers and bankers work out of, realtors, there's wealth advisors that don't have offer mortgage products, become their friends,
right?
in those same offices, right? There's also realtors are self-employed, right? They're also investors. There's bank statement loans and debt service DSCR loans and debt service coverage ratio loans. Also, there's CPAs and accountants in those buildings as well. That's where your self-employed, sophisticated self-employed borrowers that have tax write-offs, right? That could qualify with bank statements. So, there's opportunity everywhere, from the building that you're located in today to small communities to large communities. And, I think one thing that Luke and his team does extremely well is they're experts in the products, not just the products, but they work with their clients and they teach them, about the products, how to leverage the products. And, our training group, we're doing, a ton of that, educating the clients on these products, and educating them how to go and find, the products in the marketplace, and how to find the borrowers, these other alternative, sources. Luke, I don't know if you have anything you want to piggyback, touch base there.
No, 100% I do, actually. So coming from a retail background myself, being a loan originator, you're always wondering, where's my next client coming from? That's always our great question. At the beginning of every month, we're trying to refill that pipeline. And so when we talk about, back up real quick, talk about that self-employed borrower. You guys all know one. If you've ever bought or sold a house or worked with somebody that buys or sells houses, that real estate agent is a self-employed borrower. If you've ever enjoyed a rideshare app, you've had 30 minutes in a car ride with a self-employed borrower where you can talk about the opportunities that person may or may not have to purchase a home. And I'll tell you a quick story on that one. We just closed an Uber driver. You'd be surprised at the income some of these Uber drivers are able to produce, and to buy a $600,000 house. Again, just closed on one just the other day. And then when we're talking about that high net worth, that sounds really attractive, but it also sounds fairly unique. Look at your own book of business that you've already closed a bunch of loans for. Think about the client that's used you 4 times over to move up to that big house. Now they're later in life, maybe retired, and are looking to move back down. Maybe they're on a fixed income, so there's not an opportunity to meet that DTI. That's where either our asset utilization, right? They sell the house and then we have enough money left over to qualify just on those assets. And that's done a couple different ways. Either we have 1.5 times the loan amount, or we just have enough money to qualify all of their debts for about 84 months. The other one being is like that DSCR, that investor. So again, you probably already have these clients in your book of business. Again, you don't call them quite as much because they've already bought their 4th home. They're on that fixed in or limited income at this point. But if they have a bunch of assets available, maybe they want to buy an opportunity to buy one of those investment properties, spread out their portfolio a little bit. Again, you guys already know all of them. It's just sourcing them and just having a different conversation than what you had previously.
So how, Luke, real tactically speaking, I mean, what advice would you give up to move from being reactive to non-QM, which I think the bulk of originators are, to really being proactive, setting up a plan, going after these customers? How would they work with your team in order to make that happen?
Yeah, no, that's a fantastic question. I think reactive is the best way, because I'll tell you, so many times we get a call that says, hey, I just tried qualifying this guy to buy, use an FHA loan or buy a conventional loan. He just writes off too much on his taxes. Can you help us out? And sure, that's our bread and butter client. We do that all the time. We're really good at that stuff. But that's opportunistic. Let's be proactive. Let's seek this out. How do we not just close more of the business that we have coming in, which is awesome in its own right, but how do we increase what opportunities are coming across our desk? And that is saying, well, what is a self-employed borrower? Let's first ask that question. And then start just, and no kidding, we have these with our clients all the time, a whiteboard session where we just start listing off, do you know any self-employed borrowers by industry? And I kind of mentioned it earlier, rideshare driver, a real estate agent. But there's a bunch of different opportunities that aren't just self-employed, meaning they own their own little business on the corner, but maybe they're a contractor, maybe they're a 1099, subset of an employee, things like that. So it's finding those industries, it's seeking out those industries, and then seeking out folks that you may know within there. I was also using your resources. So your CPAs, who do they know? Because they know a little bit about the income of their clients. Maybe that's an opportunity to partner with that to say, hey, CPA/financial advisor, what kind of clients do you think would benefit from expanding their portfolio beyond just stocks and bonds, and then start putting some real estate in there? And then those conversations can go from that point. And then it's being assertive in the sense that knowing that non-QM is a fantastic solution to help more people achieve that dream of American home ownership. And so being proactive, not to say that non-QM has a negative name, but with the word non, sometimes we associate it with, well, these guys don't qualify, things like that. That's not at all the case. If we look at our average FICO score and our average LTV, it's some of the best clients that you guys will ever work with. Not to mention the loan amount's pretty nice too. Again, on average, much higher than any of the conventional FHA businesses out there.
Yeah, and Rick, what I was going to say, just to piggyback, how do you become successful in non-QM, and how do you become a market expert? We're all professionals on this call, right? How do you become the pro or the expert, right? Because if you're this is a for-profit business. If you're a loan officer, you want to maximize the opportunity. So I would highly, highly recommend that you become a product knowledge expert in non-QM and become the pro, become the person in your market that everyone's seeking to do business with, because you're it better than anybody else. Be that person when someone says, I have a non-QM call. How do you become that first call? Not the second, not the third. In today's environment, if you're not the first call, you have to work with your client to say, why am I not the first call, right? And the way you become the first call is becoming an expert. And a couple things that we do at Deephaven, right? I think it's extremely important that you work with an investor that has the expertise, the experience, the capital structure, all the resources needed, in order to help you become that expert, right? Because you could have the expertise, but if you don't have the investor behind you to help you execute in a purchase, market, making sure those loans come across the table on time and they close on time, right? That's important, because every person in that transaction is a customer. If whether it's the realtor, whether it's the borrower, the seller, and if you make all those people happy, they're going to come back, right? And they're going to want to do business with you, right? So outside of finding the right investor, right, then you have to become a product knowledge expert, right? Become a master of your trade, right? Know the products, how to leverage them. In the non-QM market, about 95% of the market is, there's 3 main programs out there. Everyone has all these fancy names for these products, and there's 20 different type of products in the marketplace. But there's 3 really main products on the investor side. When you look at non-QM, there's a down the middle, well-heeled borrower, high FICO, great credit, great reserves, middle fairway kind of borrower, right? Then you have a credit event borrower, right? Not a credit criminal, but someone with a credit event. And then you have your investor program, right? The cash flow, debt service, coverage ratio program. And all that, those 3 programs combine about 95% of the market. Yeah. And 95% of the market, 60% is the bank statement, 35% is DSCR, and the other stuff are more esoteric, fringier products. And so become very good at those. And in those products, there's different features, right? That you have to become familiar with, how to qualify for those assets. The bank statements, the 12, 24-month bank statements, we can do personal or business, which is common in the asset utilization, a 1099 program. And then, obviously the full doc, and then your normal, debt service coverage ratio, which is your investor. So if you become very good at those different programs and know how to leverage them and in the marketplace, and when someone calls you, you can actually go through the guidelines and qualify and structure a borrower and put a deal together that closes, those realtors are going to do business with you. So I think it's important to become a master of the trade. And if you don't have that expertise, at Deephaven, we have that expertise. We have a structure desk that sees over 1,600 scenarios on a monthly basis that we're turning those scenarios around, whether it's calculating banking, some or income, or reviewing credit, or answering just general questions. We return those those scenarios back with an answer within 2 hours. So yeah, go ahead.
Just to jump on that, I want to go back to Luke on this last point. I think we're getting close to our time. The idea of becoming an expert, right? Now, Deephaven, you may be new to some of the brokers on our platform and brokers that you're seeing in the market, but Deephaven's far from new. You're the first non-QM out of the box after the Great Recession. You got about 40 sales, executives waiting to speak and help people become that expert. The execution of a non-QM loan can sound scary, like, how do I get it through? But those processes are really very much the same. And you have a super high touch team, Luke. Could you just let folks that are on the call listening that are interested in moving into, the non-QM space know, what's the depth of your bench? How do they interact with your people? How do you make their life super easy so they can go find more and know that they've got a partner that's going to push it through the funnel?
Yeah, no, that's a great question. It's a great setup. I appreciate it, Rick. So it allows me to sound really cool here for what I'm about to say. Is, no, I'm a very lucky sales manager in the sense of being in the wholesale. I have a team right here that are almost all licensed loan officers themselves. They've been there in the seat. They've originated business. They've talked to the borrower about the LE. They've talked to the borrower about what transfer taxes are every single time a CD comes out. So they understand the conversations that you guys are having with the borrower and those sticking points that inevitably come throughout. And so we can prepare ourselves to avoid those sticking points or keep them low at the time. So back to the one thing that was said, that proactive versus reactive. So I would say if everybody here wants to learn how to grow a little bit more business, give one of the AEs around at Deephaven a call, because we love to train people, not to say, hey, will this one unique deal work for us, but to say, hey, here's how these deals work. Here's how you can find more of these deals, so that you're not just saying, well, is this one that's going to work through Deephaven? But instead you're saying, hey, I just found 10 new ones that I know are going to work through Deephaven. And also these are 10 loans that I hadn't done before. And I know my team on the inside is just as much of a loan officer as I am. And so they are already anticipating those 2 months reserves that we got to show. And they're saying, hey, why don't we do this? Let's maybe structure it a little bit differently with our LTV so that we can avoid what the underwriter might say back. And again, we're not trying to have the conversation that the loan officer has to translate. Our goal is to have a conversation that you can just press forward on your email so that your borrower has no confusion along the way, because confidence creates cohesiveness, and that cohesiveness leaves with a borrower that had a really great experience, and then they get to tell all of their friends about why they should work with you, that originator.
That's fantastic. Sort of like fishing, right? Learn how to fish and you can catch bass, you can catch trout, you can catch whatever you want. So that's really great. And the processes are very, very similar, probably in many ways a lot easier to do a non-QM than a QM once you've learned the processes, as you said, and what to collect up front, because it's easier to get those things through and documented, where if you come off the rails on a Fannie approval, there's really no way to get back on the rails. You're just off the rails, right? So
yeah.
From that standpoint, there's a great degree of flexibility. I think we were scheduled for 30 minutes today, so we got to be closer, a little bit over. So I'll just throw it out for a final thought from Tom and from Luke. And again, sorry I was a few minutes late, difficult getting in, but I think it was a great conversation around how you can help service a lot of the brokers that are out there in our community. Tom?
Yeah, I just think, look, the non-QM market is one of the largest growing spaces, if not the largest growth in the mortgage industry, right? And a lot of the market's headwinds are actually tailwinds for the non-QM space. We're actually seeing record new customer growth, and on our side, on the wholesale side and correspondent side, because people need product expansion. They need to learn these products. We're going into Q4 here soon. People are going to be looking at their 2023 plan, doing strategic planning. So it's important that you work with an investor who's going to be hands-on, who's going to be able to help you with your strategy, not just give you a rate sheet, right? But be an investor who has predictable, stable, reliable liquidity for you, that doesn't just have one exit strategy, that has multiple execution strategies, or, so when we're delivering loans, you could rely on, that investor, for that. I would say, just like anything else, if you want to be really good at it, it takes practice, master, the non-QM. One thing it'll do, it'll allow you to penetrate realtor relationships that you've been trying to get in for the last, let's say, 5 years, 10 years, as long as you've been in the business. Because if no one's introducing these products to them, and you come to them with a full suite of product offering, right? And you say, hey, these are programs, or this is the menu that could help you make more money or help serve more borrowers outside the box, and you start closing loans for them, and you're the only one that's introducing the product, and you're the only one that they're calling, that'll help you get the other business too, right? So becoming a product knowledge expert will only set you aside. In today's environment, the market's down, any down cycle markets, I always highly recommend that you add to your skill set, because you have a little bit more time, and whether it's non-QM or anything else in the mortgage space, learn more and fine tune your offering and your proposition, and how can you create value to your client, right? If they have a problem, how can you solve their problems? How could you help them? Whether you created the problem, someone else created the problem, so take on more of a strategic approach, and non-QM allows you to do that. It allows you to really differentiate yourself. And, once again, we're really bullish. We're seeing a new customer growth, we're just, super excited about where the market's going until the end of the, for the rest of the year, this year, as well as into, 2023 and 24 and 5.
Luke, you want to put a bow on it?
Yeah, absolutely. So, we talked about becoming an expert, but I would advertise that most of you probably already are without knowing it so far. So one conversation I generally have with new account executives that come on board, and they'll ask me, hey, what is the main difference in non-QM and that of the agency business? And typically what I can say, and limited to this the business bank statement program, is it's everything that on the agency side. The big difference just being the income verification documents. So not how we calculate income per se, but the documentation type of bank statement versus a pay stub. Everything else is something that you're already familiar with. The other great advantage that we have is we're not limited to the results of DU. If the loan makes sense, the loan makes sense, and we're here to serve that.
That's fantastic. That's really good. Well, listen, we've got a lot of brokers that are looking at price every day, and it always helps to put a name and a face with just a price on a screen. And I want everybody out there to know these guys are available. Worked with them a lot in the past, and just really quality team over at Deephaven. So we hope some of our folks that are on the call will reach out to their team and jump a little bit more into the non-QM, because we do think it's going to grow from 8% to potentially 10%. We do think that $2 trillion number of all production may shrink. So you've got one side of the business that's growing while the other is rapidly shrinking. So you got to learn these products, and they're really not difficult. They're very, very basic, and with the right team to help you as an originator, that pick up the phone, know that you can get a hold of that AE, have them walk you through it, know that you've got a seasoned ops team, and know that you've got a company that knows how to take these loans out into the capital market. So you're not dealing through multiple layers of, oh, I've got to send it to the investor. Oh, I've got this problem and that problem. Just, we're going to make a decision. We're going to follow through on that decision. We're going to close your loan. And if that's what you're looking for, the Deephaven guys are for you. So with that, I'm gonna put a bow on it and wrap it up. We'll have to do this again soon. And thank you all, everyone who's on the call, for joining us today.
Thanks, Rick. Appreciate it.
Thanks, everybody.
Thanks, Luke.